Hello and welcome to this new edition of Bordier's Monday Report. The most notable event of last week was President Donald Trump's nomination of the future head of the U.S. Federal Reserve. Jerome Powell's replacement, starting in May, will therefore be Kevin Warsh. His experience profile, more hawkish than that of other candidates, seems to reassure the markets regarding the preservation of the institution's independence. But of course, it will be necessary to see, once he is in office, whether he will be able to withstand political pressure to lower interest rates. Indeed, on the eve of the midterm elections in November, the American president wants to focus on household purchasing power as consumer confidence is low. The pressure on the Fed to lower its key interest rates is therefore unlikely to go away. The arrival of Kevin Warsh at the head of the Fed, which still needs to be confirmed by the Senate, has therefore at first reduced the perceived risk of the central bank losing its independence. Unsurprisingly, gold and silver prices fell sharply on Friday, the day of the announcement. This correction is actually rather healthy after the parabolic surge in prices over the past few months. Nevertheless, it does not call into question the upward trend in gold, whose growth drivers remain, for the most part, well-oriented. Despite Friday's sharp drop, gold is up 1.2% for the week. The decision by the US Fed to keep its key interest rates unchanged was expected, and 10-year sovereign interest rates barely reacted to the announcement of the new head of the central bank. The dollar index depreciated by 0.6% over the week, despite the rebound recorded on Friday. Geopolitical tensions with threats of intervention in Iran allowed oil prices to rise by more than 7%. Finally, emerging market equities continue to lead the asset class. They are up by 1.8%, whereas gains are only 0.4% in developed markets. In the Eurozone, GDP growth in Q4 2025 was slightly higher than expected. We can see that this growth is fairly well distributed among the three largest economies in the zone. These positive trends should continue if we refer to the confidence indices from the European Commission, all of which rose in January. This week, in the Eurozone, we are expecting the release of consumer and producer price indices. We will also have the European Central Bank meeting, which should keep its key interest rates unchanged at 2%. In the United States, we are expecting the release of the Purchasing Managers' Confidence Indices, the ISM indices, for the month of January, and above all, the employment report, also for January. That's all for today. Thank you for your attention, and see you next week.